for 15 years and found nothing. So we're probably never going to have any kind of digital proof. And all that's left is, kind of speculation. So I think that's good for the concept of Bitcoin as a commodity. It's very easy for Satoshi not to, get identified, as he just won't engage.
In May 2025, two dormant Bitcoin wallets linked to the Silk Road suddenly moved 3,422 BTC, worth $324 million, after over a decade of total silence. No message, no exchange trails, just cold transfers. Blockchain analysts tracked every step. No laundering patterns, no coin join, no KYC exchanges, and it wasn't isolated. In October 2023, a 2011 wallet moved 150 BTC, over $10 million, after 12 years of inactivity. Some coins showed patterns eerily similar to Satoshi's early mining signature, the Satoshi pattern. These aren't just old wallets waking up, they're shaking markets, triggering forensic alerts, and reigniting the biggest mystery in crypto. Is Satoshi back? Let's unpack what we know and what still doesn't add up. The awakening of a dormant giant. In October 2023, blockchain analysts spotted something unusual. According to reports on CoinDesk and The Block, a wallet from 2011 suddenly moved 150 BTC, over $10 million worth, and it didn't stop there. Fast forward to May 2025, and two wallets tied to the infamous Silk Road moved a staggering 3,422 BTC. That's about $324 million, and outlets like CryptoSlate and Cryptopolitan were all over it. These movements from long dormant wallets reignited old discussions. Who owns these coins, and why now? What makes this so gripping isn't just the insane value, it's the eerie timing, the total silence for over a decade, and then boom, a precise, clean transfer like someone just remembered a password they hadn't used since the early days of Bitcoin. We're talking about addresses that hadn't made a peep since 2011. Not a single Satoshi moved. Then suddenly, tens of millions transferred, quietly and cleanly. It's not just rare, it's historic. I read a breakdown on Glassnode's blog where forensic analysts immediately started tracing the coins. They looked for red flags, wash trades, tumblers, coin join patterns, anything that screamed money laundering. However, according to crypto sleuths on X, formerly Twitter, these coins didn't hit any major exchange. No laundering, no scam alerts, just cold, direct transfers from one anonymous address to another. So naturally, the question is, why now? Is this someone unlocking a long-lost seed phrase off an air-gapped laptop they forgot in a closet? Maybe a dusty hardware wallet from the Mt. Gox era just came back online. Or is it something more deliberate, like a whisper to the crypto world that an OG whale is back in the game? Whatever the reason, it sent shockwaves through the chain. And as Bloomberg noted in a recent piece on dormant wallets waking up, sometimes it's not about the money, it's about the message. What is that message? No one knows yet. But one thing's clear, the past isn't done with Bitcoin. The Satoshi speculation. When dormant Bitcoin wallets suddenly spring to life, the crypto world holds its breath, and the Satoshi theories start flying. I remember reading on Wired that anytime coins from the 2009-2011 era move, it sparks a wave of speculation. Could it be him? The wallets don't just move funds, they move the narrative. The timing, the precision, the complete lack of exchange activity, it's eerily disciplined. No cash outs, no DEX usage, no KYC trails. As analysts at Glassnode have pointed out, this kind of restraint is rare, especially with coins now worth tens or even hundreds of millions. What really fans the flames is when these coins show signs of the Satoshi pattern, a term made popular by researcher Sergio Demian Lerner. He wrote on Medium that Satoshi may have mined over 1 million BTC using a unique fingerprint, specific nonce ranges and block intervals that only one miner seemed to follow. So, when a wallet surfaces with even a faint trace of that pattern, crypto Twitter lights up. Adam Back features his insights on the ongoing mystery surrounding Satoshi Nakamoto's identity.
Satoshi stopped interacting on the forums in 2011, which is a really long time ago. Many people tried to research, look at all the emails, look at all the forum posts, and trying to deduce something from a digital footprint for 15 years and found nothing. So we're probably never going to have any kind of digital proof. And all that's left is, kind of speculation about people who were interested in electronic cash before Bitcoin, or proof of work, or participate in Bitcoin development, in the last, from the early days or more recently. And of course, you can construct a kind of speculative pro and con for each person. And there are dozens of such people, right? So I think it's all speculation at this point.
There's a theory on X that these recent movements could be legal preparation, like shifting assets ahead of regulatory action or estate issues. Others, writing for Cointelegraph, suggest something more symbolic, a subtle signal that the ghost of Bitcoin's creator is still watching. Because if Satoshi is alive and moving coins, the implications are massive. Suddenly, Bitcoin isn't just a decentralized machine. It's a legacy still under quiet control, a myth with motion. And that idea that Satoshi could still be out there, reshaping the blockchain without a word, is enough to keep the speculation alive, block after block. Market repercussions. Whenever massive amounts of Bitcoin move, especially from ancient wallets, the market doesn't just notice, it jolts. In a reading on Bloomberg, even unspent coins from 2010 shifting can set off a cascade of automated alerts across trading desks. It's not about the sale, it's the possibility of one. Traders brace for sell-offs. Liquidity providers widen spreads. According to Kaiko's recent research, wallet movement from early mining days tends to trigger short-term volatility, even if no BTC ever hits an exchange. Back in 2020, I read on CoinDesk that a 2009 wallet moved 50 BTC. No proof it was Satoshi, but within hours, Bitcoin dropped nearly 15%. No fundamentals change, just fear. That's the pattern. Old coins move, and algorithms assume liquidation. Bots reposition, derivatives traders scramble to hedge. It's reflex, not logic. And the effects ripple beyond spot prices. As the block reported last year, options volume surges and volatility indices like BVOL and DVOL spike whenever dormant addresses reactivate. Perpetual futures funding rates flip, often becoming wildly negative in minutes. Even if none of the coins hit a KYC exchange, the narrative takes hold. An analyst from Glassnode notes that market behavior starts shifting purely on perception. In crypto, price isn't just about supply, it's about psychology. So, when these long-dead wallets suddenly breathe, they don't need to sell to cause panic. The market reacts to the idea of selling, and that's enough to shake billions in value. Because in crypto, a whisper from the past can cause an earthquake in the present. Adam Back shares his perspective on why Satoshi's anonymity strengthens Bitcoin's narrative, framing it as more of a discovery than an invention.
Whereas Bitcoin, its mission is more about being adopted as a kind of global fabric and electronic money, and with no founder type of figure involved, it helps it feel more like a discovery than a startup or an invention, right? So I think that's good for the concept of Bitcoin as a commodity. It's very easy for Satoshi not to get identified, as he just won't engage. He won't talk with documentary field crews. He won't come to conferences in person, and I'm pretty fairly confident that it's nobody that's been talked about. So it will probably remain a mystery.
Legal and regulatory implications. The sudden activity from these long dormant wallets raises serious legal questions. I read on Reuters that some speculate these funds might be tied to illicit activities like Silk Road or the infamous Mt. Gox hack, cases that still haunt crypto's past. If authorities link these coins to criminal acts, they could pursue asset seizures or even criminal charges. Law enforcement isn't blind anymore. Firms like Chainalysis and Elliptic, mentioned recently in a Bloomberg report, have built forensic tools that trace every step of a coin's journey with surprising detail. A wallet silent for over a decade isn't invisible. Its entire history can be reconstructed. If that path crosses darknet markets or stolen funds, it becomes a prime target. I recall the Wall Street Journal highlighting how these blockchain forensics have led to multi-million-dollar recoveries in recent years. On the regulatory front, the U.S. Department of Justice has become more aggressive about crypto forfeitures. For instance, in 2022, they seized $3.6 billion linked to the Bitfinex hack, a case that set a clear precedent that no matter how old the funds are, they're not untouchable if a paper trail exists. Tax compliance is another angle. The IRS and global tax authorities, as noted by the Financial Times, are tightening the noose with frameworks like the OECD's Crypto Asset Reporting Framework, CARF, designed to crack down on undeclared offshore holdings. Pseudonymous wallets no longer guarantee anonymity. In this evolving landscape, what seems like a quiet wallet transfer can trigger loud consequences: civil suits, criminal probes, and even international regulatory pressure. So, these mysterious moves don't just spark curiosity, they demand scrutiny. The enigma persists. Despite deep dives by blockchain analysts, the true owner of these wallets remains a mystery. I read on CoinDesk that no coins have moved to exchanges like Binance or Coinbase, and no public statements have surfaced. Only silence, which only thickens the plot. Blockchain detectives have combed through transaction patterns and wallet histories, and even inferred time zones from activity timestamps. But every theory seems to hit a dead end, as the block reported recently. Was it an early miner reclaiming long-forgotten BTC, or just someone rediscovering a cold wallet after years in digital limbo? The absence of transfers to known platforms adds fuel to the speculation fire. Interestingly, unlike past cases covered in Bitcoin Magazine where wallet owners left cryptographic signatures to prove identity or calm markets, this time there's no message, just clean, silent, on-chain movement without a hint of narrative. Some analysts even scoured forums like Bitcoin Talk and Reddit for linguistic clues, hoping a familiar voice might resurface or that patterns in posting times could give away a location, as Wired once explored. Yet, no trace, just a cold trail that only intensifies the intrigue. In a blockchain world that prizes transparency and traceability, this total lack of context feels almost theatrical, like someone deliberately choosing opacity in a system designed for openness, as Bloomberg suggested in a recent analysis. The result? A riddle wrapped in code, elusive and unsolved, a silent ghost moving through Bitcoin's ledger, reminding us that some mysteries may never be cracked. The sudden activity of a long-dormant Bitcoin wallet has stirred intrigue and speculation, whether it's the actions of Satoshi Nakamoto, a resurfacing early adopter, or an entity with unknown intentions. The crypto world watches closely. As we continue to monitor the blockchain for clues, one thing remains certain. In the realm of cryptocurrency, mysteries abound, and the story is far from over.